Dan Deving of KKM Financial joins us now for the Trader Rundown. And Dan, as you know, a lot of traders watch for IPOs. These are companies that are listing for the very first time.
Yep.
As a trader, is that a trade that you tend to stay away from, or do you want to jump in?
If you have some risk capital, I have participated in some IPOs over the years.
Have you?
Yes, and some of them have gone okay, some of them have not gone so well. So it's a very dynamic area, and it's very high risk, high reward. The one thing I can tell you though, Angie, is that when you look at IPOs, you really got to do your homework, and you got to understand valuations and try to get as much information as possible before you make that decision. Facebook was a tough one, as far as when it listed. Again, I wasn't participating in the actual IPO, but when it started trading, I took some position in there, and Facebook was one where that one certainly went south initially, and you really had to ride that one out. But again, that's the nature of the game with the IPO front, Angie, is the fact that you have to be in the mindset and understand that this should be risk capital. It shouldn't be something. If this is the money that you're hoping to retire on, you should look at this differently. This should be strictly, I think, the best thing I can say is it should be capital you're willing to lose.
You also mentioned about doing homework. So when you say homework, what do you as a trader look for in an IPO?
Well, again, you got to look for value traps. You got to look, is the space crowded? Are there large players in the space already, or is it a space that is new, that is developing, that some of these companies that are listing have an opportunity to participate in and have a higher probability of success? And
what other tips would you give as far as doing homework?
I think, if you can get into any of the financials of the firm that's becoming an IPO, or if it's in the stages before it's an IPO, if you can get any information there, that's important. The risk metrics, again, understand that this payoff might not come for years, and you might have to go through some drawdown in your initial position. So I can tell you that a third of IPOs, after they come out, delists it within a few years.
Oh,
so
really
about
south.
30% actually don't make it after, let's say, a 5-year period. And after 1 year, half of IPOs are below their IPO price. So those are things that you've got to keep in mind, because it is, again, a high risk, high reward type of trade.
Thank you so much for those insights.
All right, thanks for having me.
Check out businessfirstam.com to find out where to see our entire show. And don't forget to like, follow, and share Business First AM.